Crypto Hotep here with another investing video. We're on week 35 of the Family Portfolio and Dividends Tracker. If you're unfamiliar with these videos, please do yourself a favor. Go to my channel, go to week number 1, and there you will find my whole methodology for why I'm doing these updates, these weekly updates, what my thought process was, and the entire methodology behind this. Basically, in a nutshell, what I did was I shortlisted several stocks and companies that my family chose from themselves. They picked out the stocks that they resonated with the most. We then proceeded to use M1 Finance as our broker of choice. Within their tech, they can actually make sub portfolios in one big main portfolio. So this family portfolio, you'll see, has little sub portfolios for each of my family members and their respected stocks. Every week, we go through the stocks. We also go through market updates, emotions, thoughts, how we're feeling. And it's all to track the investment journey and also to showcase that you can start with very little and grow your wealth over time, which is the big thing, instead of keeping your money stagnant in a bank. Hopefully my family find these videos when I'm gone, and hopefully they are helpful for them. If you find them helpful, feel free to like, subscribe, comment, but by any means, this is not financial advice. We're not telling you to invest into specific stocks. Please do your own research before you start investing. But with that being said, we can jump right in. Before we go to week 35, we're going to jump into week 34 again. So week 34, last week we had a balance of 1349.25 with a money weighted rate of return year to date of 13.95%, a market gain of $76.47, and then dividends earned of $8.36. Let's see what week 35 brought us. So week 35, we have 1448.67, money weighted rate of return of over 28% year to date. That's not a typo. We went up 15 points almost in 1 week. Market gain over $162.64. That's not a typo. And then dividends earned, we went up a little bit there at $8.91. So what actually happened? Well, there was this little thing called the election that happened this week, and that caused a giant stir in the market. Now, whoever you went with and whoever you voted for, it really, honestly, it didn't matter because the markets would move in any direction. There was going to be a big move anyways. There was more movement because of Trump, who was elected, that the markets moved in a very positive way. This included stocks. This also included crypto as well. So we saw a big uptick for this. And that's based on the premise of the markets felt a little more comfortable with Trump and the economy. And they felt, or the markets felt, as though that would benefit those companies as well. So that's why you see this big uptick here in the balance, and then also the money weighted rate of return. Now let's see what happened here in the activity. So we did have our deposit. So between this week and last week, a couple things. We had some dividend activity from Lowe's, 3 cents, Clorox activity, 6 cents, or Clorox dividend activity, 6 cents. We had our deposit that we normally do. And then we did have a couple buys here. So we had 6 buys. We bought some McDonald's, some Starbucks, some Apple. This O Realty, this was mine. So we bought a little bit of O there, Target, and then Pepsi. Pepsi more than likely went to my wife. I can automatically guess that. In addition to that, we had dividend activity with Deere Company and American Express. Now, again, if this is your first time watching the video and you're seeing these amounts in terms of dividends, 4 cents, 4 cents, 6 cents, and 3 cents, and you're saying Crypto Hotep, this is not a lot of money at all. Why are you investing in the dividends? Well, you are 100% correct. It's not a lot of money at all, but I am a big advocate of dividends and dividend stocks just for the passive income and to keep that investment vehicle on cruise control, no pun. When you're starting out investing, or even dividend investing, those dividends will be minuscule. The biggest thing is to just stay consistent and to invest money into good quality companies and just have that position grow over time. The more growth in that position you have, the bigger these dividends will become. So I'm actually excited to see what they'll look like in 2025. Now, the good thing is, I will say this, with M1 Finance, they have this dividend income tool, and I've went over this a couple times now, but not only can you see the dividend income that's been paid out for 2024 and 2023, as well as see what's upcoming in the upcoming months, like November, December here, that is yet to be paid, but you can project the next 12 months as well, which is kind of nice. So you can see the next 12 months what that dividend income will look like based on the positions you have currently. So good to see. Now, as you can see, 2024, we're at 1232 total. Next 12 months is projected at 1848. That's if we were to keep everything the same. Now, hopefully we'll be putting more into that brokerage account, and hopefully those numbers will go up and inflate. But it is still a good tool to see and to manage that piece of the pie in terms of dividend income. But as always, let's go from bottom to top and see what we have cooking here. So bottom, my wife's stocks, unfortunately, at the bottom again. If you've been following, Celsius, just the Achilles heel of the portfolio. They did have their earnings this week, and they did miss on both revenue and earnings per share. Again, I'm going to wait. I spoke with my wife about this, about Celsius Holdings. She was a little perturbed because everything else was doing okay in the portfolio except this one stock. It was very annoying, which was her quote, very annoying that, Celsius is just down. I want to see the end of the year for Celsius and how they finish as a business. That's what I want to see before we make any decisions. And again, we've only held this, we haven't even held it a year. So I would like to see what their business closes out in the year before we do anything. Google, fantastic price on Google, up 21% on Google. Tesla, again, with the whole election piece coming into play, it was almost an Elon Musk win too, and that translates to this Tesla spike that we see at over 24%. It's really an amazing percentage. This really a percentage gain here. PepsiCo down almost 2%. Not really worried about PepsiCo like that. Let's go to our middle stocks. So our middle stocks, again, middle stocks are benefiting from the big spike. Usually our middle is kind of the consistent portfolio. Usually the weighted rate of returns are around like 9-10%. Nothing too like dramatic. 9-10% is still great, but some of the other pies that we have are generating 20, almost 30%. But as you can see, this big spike also generated for our middle up almost 19% year to date. Very good here. And everything literally in the green for our middle stocks. There's really no bad stock on this list. Even Nintendo, which normally is trailed behind, is up 0.25%. We have Target up over 1.5%, and then everything else just ballooning here. It's really the stock market was really euphoric this week. It was towards the end of the week. Everything was just going up. Let's go to our youngest. Now, our youngest, that isn't a typo, 38%. This falls in line to our youngest portfolio normally. The youngest usually has the highest weighted rate of return out of anybody. And so weighted rate of return of over 38, almost 39% year to date. Nintendo down a little bit, 0.15%, not really worried about. Tesla up over 100% on Tesla. That is not a joke. Up over 100% on Tesla year to date. Again, I think we went into this last week, but in M1 Finance, you can go in here and then you can see what the average cost is, right? So the average share price we've been paying is $216.89. The cost is $140.11, and Tesla eclipsed that $300 mark at $321. So just a great position that our youngest is in with Tesla currently. And then we have Starbucks up over 25%, Apple up over 30% as well. All right, and let's go to our oldest. Our oldest is demolishing everybody. Wow. I gotta take a pause here. So our oldest year to date money weighted rate of return over 66%, market gain of over $60. Wow. The balance in there in our oldest is eclipsed over $505. Again, Tesla, right? Tesla pushing the most with the gains right now, up over 46% on Tesla. Even though it's not over the 100% our youngest, it's still a tremendous percentage gain that's pushing the portfolio. Apple up over 22%, Costco up over 18%, McDonald's up over 7.5%, just behind, and you're still up over 7.25% with McDonald's. And last but not least, mine here. So I usually have, besides my wife, I usually have the lowest weighted rate of return because mine is all driven across many sectors. I'm up 17%, over 17.5%. Again, when you're comparatively speaking, it's pretty low compared to my other family there, but all good. As you can see here, we are green across all bases right now. We'll go into pharmaceutical because we're a little bit low there. On pharmaceutical, we're down over 1% on Johnson & Johnson, and then Pfizer up almost 3% there. Okay. Real estate up in the 20s. Tech, of course, up in the 20s. Tech's going to keep flying. Industrials and energy has been doing really, really, really well that I've seen. So we have Centos up over 44%. Duke Energy had very good earnings this week. I think they had a double beat with revenue and earnings on earnings per share, up over 22%. Caterpillar up over 16%. And then, Waste Management, Deere, Chevron, Union Pacific, Exxon Mobil, all in the green there for industrials and energy sector. And, the growth in the meme stocks, again, this is always going to be pushing this. We always go in here because the rate of returns is just ridiculous as of right now. Palantir up over 180%, right? I don't have that much into Palantir because the growth in the meme stocks are only about 3 to 5% of the whole portfolio. Tesla, MicroStrategy, CrowdStrike, and then DTE. The biggest thing I would say when we are investing, and we'll kind of wrap this up, but the biggest thing about investing is just continuously investing into those good quality companies. If you've been following this channel for a while, again, this is week 35, right? So we did start off very humble beginnings with about $200 in the bank, or in this retirement account, I should say, 35 weeks ago, right? And we just kept every 2 weeks just putting little money in here, little money, and it hasn't been a substantial amount. It's only like $15 or so every 2 weeks. That most people can afford that. And then if we get like a bonus check or anything like that, then we'll put a little bit more in there. But it shows that even if the markets are down, we're still investing, we're still putting money in there, because markets are made to go up over time. Does that mean they're going to go up every time, just right through? No, it doesn't. There's going to be a correction where price will dip lower to a value area to then go higher. But if you look at a chart from left to right, more than likely the price for quality company stocks are up and to the right. Big example of that, just look at the S&P 500. S&P 500 is a very boring it can be a very boring ETF for some to invest in because it's not exciting. It's not like Tesla with the big price swings and everything. But over time, it's up over 5, 6, 700% over time across the long because it's up and to the right literally forever. And that's just because stock markets in general, are made to go up over time. So I'll just say that to say, yes, this is a good time right now, right? But as always, you gotta think of both sides too, and you have to be prepared when that market does dip, because you gotta have your emotions in tact and say, okay, I'm still gonna put money in, I'm still gonna invest, even when the portfolio is red. I'm still gonna put money in, still gonna invest, still gonna believe in these companies and their mission, and still believe that eventually prices will turn around. But all in all, tremendous week. I'm excited to see what next week brings. And as always, guys, if these videos help, feel free to like, subscribe, comment. But thank you and happy investing, guys.